I took a course on SMC and this is everything that I learned. Hi, my name is Genesis and I'm a crypto trader. If you are new to the channel, you're welcome. What I basically do on here is I come on here, analyze the chart using price action and give out what I think the market is going to do. And if you're new, you can check out my old videos and check out the track record. So that's not why we are here. I'm here to talk about SMC. So a friend of mine came to me and told me about SMC, and to be sincere, that's not the first time I'm going to be hearing about SMC. But in my head, I already came to the conclusion that SMC is more for scalpers, day traders, and forex traders. It's not as volatile and as flexible as price action, because price action I learned from a forex trader, but I'm applying it in crypto trading and it has been working fine. Again, if you're new, you can check the old video. But I decided to finally take a course on SMC. So what I'm going to be doing in this video is I'm going to be breaking this video into 5 categories. First, what is SMC? Second, the similarities between SMC and price action. Third, the differences or the uniqueness of SMC. Fourth, where it's best applied. And the last but not the least, I'm going to be going on the chart as usual. I'm going to be analyzing Bitcoin and Ethereum using price action and also using SMC. So we can both look out for the prediction and see which one you think already. I think I already made up my mind on which one I'll be using. We're going to get there at the end of the day. But then for now, we're going to be doing these 5 categories. So without wasting much time, if you're new to the channel, the best thing you can do for me is to subscribe. And to some extent, it's going to be beneficial to you too. Okay? With that being said, let's hop right into the video. So starting off real strong, what is SMC? SMC simply stands for Smart Money Concept. I know it originated from ICT, Inner Circle Trader. ICT and SMC are basically the same thing if you ask me. It's just they just changed the name, but to me it's still the same thing. What is SMC about? To me, I can define it as a 3rd generation strategy. I think the first generation is price action, because even ICT is based off of price action. There's price action, there's ICT, and then there's SMC, the 3rd generation. So I feel like to some extent it's like their grandson, but we're going to get into that. So what are the similarities between price action and SMC? First things first, market structure. We basically do the same thing, although there's some uniqueness in the way SMC does its own. But from a price action perspective, I feel we do the same thing. Now let me say this, I took the course in like a week. I finished it in like 5 days. Well, the reason I was able to finish this course so fast is because most of the initial stages of the course is something that is already known to me. It's not a new thing to me. Like they were doing the higher highs, higher lows, higher high, higher low. For a price action trader like myself, I don't map it out the way SMC traders will map it out, because they are mapping every point out and they are labeling it higher high, higher low. And this is because it's helped them in using their order block, which I'm going to get to in a minute. But they map every step out. But for me, a price action trader, I don't map it out. I just look at the charts. Okay, this is the trend. I pull my trend line and then I do whatever I want to do. But for an SMC trader, they map it out because of their order block. Now, what other similarities do they have? We do the same top-down analysis. They do top-down analysis, we do top-down analysis. It's basically the same thing, although they have their uniqueness to it, but it's still basically the same thing. We use support and resistance. Their order block is a very strange thing, because when I started looking at order block, you could easily use it as a support and resistance. You could easily use it as its demand or supply zone. So depending on where you're coming from, but if you take a course on SMC and you're probably good with price action, order block will not be so new to you. It's something you're already used to. Another thing that we do together is liquidation, the liquidity pool, but we just call it, for a price action trader, we still refer to it as demand or supply zone, depending on where it is, and then we call it, or range, depending on what we are doing. But then they call it liquidity. They say liquidity pool. So while I was taking this course, I kind of like, I'm sorry if I'm just saying this off of my head. I'm going to be going into the charts and breaking this thing down, make it make more sense. But before that, I just want to give you guys the template and how everything is going to be. So while taking this course, I was saying liquidity pool. And I was looking at what they were calling liquidity pool, and to me, most times it was just chart patterns. So it's just chart patterns that was being called all this name. Although, like I said earlier, they have some twists and turns to it, but it's still basically price action. So when I look at it, I'm like, I don't need to call it this. If I was trading and I saw something like this, I know how to tackle it. But then they have their own uniqueness. So those are the similarities between the two of them. But what are the uniqueness of SMC? Now, the main uniqueness of SMC for me is the ability for an SMC trader to go as low as 15 minutes time frame and execute a trade. So some price action traders are that good, but for someone like me, check my track record. If I've given out 10 trade calls, 9.5 of them was spot on. I'm not saying my accuracy is 9.5, but I'm telling you that if you are doing what actually I'm saying that price action, we don't go as low as, I think the least I go is like 30 minutes, but on a good day it's 1 hour, 4 hours I execute my trade. If you're a day trader and you're using price action, most times it wouldn't work in your favor. You're going to have a very low risk, you're going to have a very low win rate. But if you're an SMC trader, SMC traders, they tend to go very low. This is why I say most times SMC are for scalpers and day traders, but price action is for like swingers and investors. And you have to be very good before you can use price action to be trading. I know day traders also use price action, but if you want to get the most of the trading, I would advise you use SMC. Another uniqueness of SMC is order block. Now, when I start learning about the order block, I tend to evaluate my own trades that I've taken before from price action. And what I realize is I've been losing a lot of percentage because I deal with percentage on cryptos. We don't do pips. They do pips on Forex. I realize I've been losing a lot of percentage from waiting for my signal in terms of price action confluence to fully develop before I execute a trade. But with SMC, I realized how many trades I could have taken before it even came into the point that I feel like it's safe. You get, and most times it actually played out because I'm still, even though I'm using order block from SMC, I was analyzing from the point of view of a price action trader. So it gives me a little bit more clarity and give me more sniper kind of entry. Another advantage or uniqueness is the term that I heard, fair value gap. Although this is a bit confusing, I won't say it's completely new, but it's something price action traders we don't really concern ourselves about as much. Fair value gap, the way I was taught is when a market spy or jumps out of a point and did not come back to mitigate that point. I'm going to go into mitigation too. And it does not come back to mitigate that point. That space is what is called a fair value gap. That point. I'm going to go into my charts and break it down a bit more, but let me just give you like the concept like I said. When it does not come back into that zone to mitigate that point, that's a fair value gap. And 7 out of 10 times, it's probably the market is probably going to come back into that zone and mitigate that point. I said 7 out of 10 times. If I was to be talking about price action, I would tell you 9 out of 10 times something is going to happen. But then on SMC, it's 7 out of 10 times. Let us put that out there. It's going to come back and mitigate that position. So that fair value gap is a new concept to me. Another thing I would like to talk about is mitigation. What it means is just basically setting your order block, waiting for the market to come into your order block, mitigate that point, and then you can start taking your trade. I'll show you more on that one, but then it's just a new term. These are things I learned. There's some uniqueness to SMC. And last but not least is what they called accumulation, expansion, mitigation, continuation. Did I get that right? I think, yeah, it's supposed to be accumulation, expansion, mitigation, and continuation. This is one of the reasons I said SMC is just basic English. It's just too much English. What this basically means is a ranging market shooting out of a range, coming back to the top of the range and continuously go and then continue its motion in going up or going down depending on what the case is. That is what that accumulation, expansion, continuation, mitigate. It's a lot, but I get what it means. But then I never look at the market that way. I never look at it that way. If I'm trading a range breakout, although I expect the market to come back, but I cannot really execute a trade based off of it coming back. That is one new thing I learned from SMC. So I'm going to give that to SMC. What are the use cases? So SMC is for day traders and scalpers. I'm going to say it over and over again so that it will sink in. You can use SMC to trade for swing, but most of the time SMC are for day traders and scalpers. The reason why I say this is for price action traders, we tend to look for the trend. We stick with the trend. So if the market is in an uptrend, we don't look for sell, we only look for buys. But in SMC, they still look for buy because they go. SMC trader will go on, let's say on a weekly time frame, the market is bullish. On a daily time frame, the market is bearish. On the 4-hour, the market is bullish, and then 30 minutes, the market is bearish. Now they'll take their decision off of the 30 minutes and they start executing trade, knowing that it's violating the overall market trend. But for a price action trader, we don't do that. We tend to look for entries that associate with the initial or the biggest time frame. So if the weekly is going up, we are only concerned with uptrends. So that's why most time we don't execute on this lower time frame. We tend to look for entries on 4 hours and 1 hour, because whenever a candle should form on a 1 hour time frame, that means it took it 1 hour for it to make that candle. So that means a lot of SMC traders have taken a lot of trade, a lot of scalpers have done their thing, a lot of investors have done their thing. That before that one candle should form. So to some extent, we are very patient. For price action swing traders, we are more patient. We tend to calm down and look at trade for a while before we execute. So that's why when I say we are more like 90% accurate over SMC, you know where I'm coming from. Another unique case of SMC is executing. I feel like which is something I'm trying to incorporate, if I'm able to master SMC and using my price action strategy, I think I'll be able to make more sniper entries that are very sharp, because I'm going to give it to SMC. It is better in executing trade. Price action is better at analyzing the charts. SMC is better at executing trades. So I feel like they complement each other. If you know how to work with the two of them, it's going to make you a better trader as a person. Now let's go. So this is the Bitcoin chart. Or they already did the analysis, but I just want to walk you guys through what I did. Now, this is on the, okay, let me go to the weekly time frame. Now I'm on the weekly time frame. So as a price action trader, I'm going to be doing the two of them simultaneously, so you guys can tell me which one you feel is better. I'm going to adjust the camera a bit. Okay, I think this is better. All right, so I'm going to walk you through. So for a price action trader, this is basically what I look at. This is a typical price action trader kind of chart. Although there are some modification that has been done to it, but at the end of the day, it's still basically the same thing. So for a price action trader, this is going in an uptrend. You see, the Bitcoin chart is in an uptrend, no matter what it's doing. But then after getting to this point, let me quickly say this. There was a video I made where I said Bitcoin was going to I said Bitcoin did not make an all-time high. I think I'll link the video up here somewhere. This is why I said what I said. Look at the 2020 high. This is 2020 all-time high. This bar was pulled from the 2020 all-time high, and that is exactly where 2024 all-time high stopped. And I said that in the video, and it was sounding a bit controversial. This is the power of price action. This is what we can see from a price action point of view. So that aside, okay, so for a price action trader, I see an higher low. For SMC, they are basically going to see the same thing, and they're going to work with the same thing. Now, this is not where our differences start. Now, for a price action trader, I get to this point, and then the market starts consolidating. The market is currently in the range. Bitcoin is currently in the range, yeah? So for a price action traders, I'm not looking for anything. What I'll mostly be looking out for is the market to pull back into this trend line, and then I'll look for entries. That's for me. Even though it's on the weekly time frame, I can go on the daily time frame to see if I can see more. But for now, the market is ranging, okay? Now, if I go on the daily time frame, I will start seeing something else. Okay, this is from a point of view of a price action trader. Now, this is technically a downtrend. This is a lower high, lower low, lower high, lower low, lower high. This is an equal low. Now, for SMC traders, they will tell you this is a liquidity pool. They'll put the line here and tell you this is liquidity. Respect. For a price action trader, I see a double bottom. Would I react to this double bottom? Yes, on one condition, if it breaks the neckline. Now, this bar that I see, let me clean it off a bit. I'll replace it later. I'll show you what it means. They'll put this bar and they say liquidity pool. I come here, I see a double bottom. Okay, fine. Would I act on it? Most probably. So why would I act on it? Before I act on it, I need it to break the neckline because this automatically becomes the neckline of this double bottom, yeah? I will wait for it to break the neckline. But then see what he did. He came into the neckline now, he's dancing around it. Okay, fine. So what do? I go on my 4-hour time frame. I'm still doing this based off of price action trader. I go on my 4-hour time frame. My 4-hour time frame is what? It's in an uptrend. So what do we have? We have higher high, higher low, higher high. So this, before I execute this trade, I need this to pull into this trend line. And then once it pulls into it, I pull a counter trend line, and then if it breaks, I go up with it. If it breaks this trend line, I wait for a breakout, complete breakout, 4-hour close, maybe pull back inside, and then I start selling or use my Fibonacci. But what SMC traders will do is this. So from this point, let me make this a bit wider. So once an SMC trader comes into this point, he pulls what is this called? Order block. So they'll put something like an order block here. So if you want me to go into more detail on SMC, explaining just SMC for what it is, I can. But I'm assuming to some extent you have ideas. But then if you don't feel bad, just let me know in the comments. I'll break down the entire SMC to the best of my knowledge. But then this is basically what they will do. So this is what they call the fair value gap. This point here that has not been mitigated. This is a fair value gap for SMC trader. And then they put their order block from the point at which the fair value gap originated from, and they wait for the market to pull back into that point and they start selling. Now so this is order block of 4-hour time frame. This is where SMC thrive. They go as low as they go as low as 15 minutes, but then I'm going to stop at 30 minutes for the sake of this video. Okay, so I'm trying to show you guys something. I don't know why my screen is, I think I need a proper laptop. Anyways, what I'm just trying to do now is I'm trying to refine. I want to refine this order block the way an SMC trader would refine it so that they will be spot on. So let me zoom it in very well. So now for SMC trader, look at what they will use as their order block. You see this green bar here? I don't know if you can see it. Let me zoom it in a bit more. So their order block will be based off of, so if it's going to be a downtrend, their order block will be based off of the last green candle. The body of that last green candle will be what they will use as their order block. So if you look at this one now, this is the last green candle here. So you feel me? So they put it here and they adjust it based off of the height of that candle. So now this is a perfect order block. Now you can now come into the future. Let's see how it reacts to the order block. So now, initially, when I drew this order block on the 4-hour time frame, you notice that it was touching this point. This point was entering. But because of the fact that I went on 30 minutes and I refined the entry, it didn't touch this point. So they would not have entered the trade. But then at this point, this is where they would have entered the trade for SMC traders. They would have entered around here and their stop loss would probably go somewhere here. And they probably shoot for something like here. Now, this is where it gets complicated for SMC trader. This is another order block here. Let me pull it. This point here is an order block because it's after getting to this point, there was a spike to the upside. Okay. This point here is another order block. So I can pull this a bit closer to this. Okay, let me just leave it at this. But you get the idea. Both of these are order blocks. So for SMC traders now, they'll be waiting for the market. They'll probably be taking profit around here. Or if they are feeling adventurous, they will wait for it to come all the way here. But for price action trader, this trend line should not be neglected. You would never just look at this trend line and be like, okay, it's not. No. So for me, I'll probably be waiting for the market to come into this trend line, react to it, and then I'll decide on going higher or going lower. Well, for SMC trader, they don't really regard this. They'll probably be waiting for the market to come into this point. Now, this is another interesting thing. They don't just randomly pull order block. They wait for change of character. That's what they call it. They say, no, break of structure. They call it break of structure, which basically just mean, okay, so let me give you a typical example of what a break of structure is. This market is going high from here, lower high, higher low, higher high, higher low, higher high. So this structure is being broken. That means a new high is being formed. So this point here is a break of structure here. Let me just use this trend line and just pull it so you know. So this point here, this line here indicates a break of structure. And what caused that break of structure? This other block here, this is where it started from. Okay, it causes break of structure. So this is a valid order block, and then at the same time, this is a fair value gap, so which needs to be mitigated. That is what they say. This one did not really break any. Okay, this also break a structure because this market was in a downtrend. Okay, it wasn't an uptrend. So boom, boom, boom. But then this did not significantly break these points. But yeah, we can still count it as such. But then we can count it as another order block. So there's a break of structure around here, which is not very clear, but we can still work with that. A break of structure. So this other block is also valid. So which one are we going to test? We don't know. But what we know is these are points of concern as far as SMC traders are concerned. So for an SMC trader, they probably are already in the trade, but then they don't stay in the trade for this long. They probably have taken profits in like 5 minutes or 15-minute time frame. But I'm trying to refine this to a price action trader. So if I was to take this, I'll probably be waiting for a reaction in this trend line, and then I'll decide on what next to do. Okay, so let's quickly go to ETH2 and try to use the same analogy, just combine the two of them and show the differences. So this is Ethereum. I'm going to go into, let me just start from the daily time frame. This is, okay. Oh, wow. Let me go to weekly. I think I see something interesting. Okay, yeah, this is what we have here. This is in an uptrend, but then we form a double top. So technically, it's now in a downtrend. It already broke the neckline. We are coming down. Now it came down into this trend line. So this is the only thing holding it from going down. So this is where price action thrives. The SMC trader might possibly not see this. They will not regard this as a trend change. It will just be liquidity, and they're waiting for the market to shoot into the liquidity and start going up back. No, for the price action trader, we respect chart pattern on higher time frame. So if I should see this, even in my dream, I will know the market is about to reverse. SMC traders, most times they don't see it that way. Okay, so they'll just be like, okay, this is another order block, and they wait for the market to pull into here. Why me? I'm already shorting. I'm already taking my W's, you feel me? So now this is what I see. I see the first touch, the second touch, and this is the third touch of the trend line, and it's already going back up because it already broke this major zone. Let me go on the daily time frame. Now it already broke this. This is the third touch. Now it broke this major zone, so it's looking nothing but up. You feel me? This is looking nothing but up. Okay, there's nothing really much to discuss on the daily time frame. Let's go on the 4 hours. Okay, yeah, I think this is one thing I just pulled here. What's it called? Another block based off of this fair value gap. But then this fair value gap would not be valid as far as price action is concerned, because this market is not within a, what would I say, a price limit, because this blue bar is a major zone from a daily time frame. So the market will not just be playing around it. So for the fact that this market broke this major zone and is now above it, this other block is invalid. I don't think it's going to be valid again. I think it's invalid, but then SMC traders might argue this. But for me, it is invalid. Now what do we have? We have this move to the upside, the consolidation, and then pull up. Okay, yeah, this is the long English that I was speaking about. Consolidation, breakout, mitigation, and continuation. I think this is a typical example of it. Let me refresh my chart and show you. Okay, all of this here now is consolidation, and then this is the shootout, and then this is the mitigation, coming back here to mitigate to this point, and then continuation. Did you see it? consolidation. All of this everything here is consolidating. They didn't make any significant move. Yeah, was where it broke out from. Consolidation, expansion. It came back to mitigate this point with this, although it's a bit too aggressive. It came back, mitigate, and then continuation. So it played out perfectly in this case. For what's it called? For a price action trader like myself, I wouldn't even want to look at that. I'll probably be like on 4-hour time frame. Oh, it broke it. Okay. So what am I looking for? I'll pull a counter trend line. If it breaks the counter trend line, we are going up. Now this is a 4-hour time frame, so I don't see any neat counter trend line to form here. But let me go on 1 hour. Yeah, so I'll probably pull my counter trend line from here. Because once you break a major zone, it's supposed to respect it. So once it broke, it came down into it, break the counter trend line. Although it's a very small move, but I'll take 50% of my position out in this point. And then what would I wait for? The next major point, which is going to be this black bar, which is at about 3K. So that is how we trade on price action. But then for SMC, they probably be taking a lot of your profit already, or they've taken it all, because they like to believe that they are not greedy, that price action traders are greedy, but we are not. We just tend to wait for the market to be there, and when we take the trade, we take it once and we rest. We don't trade as much as them. I mean, for me, sometimes I trade like once or twice in 2 weeks, and I hold my trade for like 3-4 weeks. There was a particular trade that I held for like 8 weeks, which is about 30% move on AR. It's moved about 30%. I used 10x leverage, so I did like 300% of my accounts with just that one trade. But then I waited on the trade for like, I think about 4 days for it to completely come into where I want it to before I execute that trade. But then for SMC traders, while I'm waiting, they might be taking small, be winning, be losing, be getting stopped out, be taking TP. I'm just observing, and when it comes, I shoot and then I hit, and I wait for all of the move. But for them, they probably if it was to be an SMC trader after this mitigation at this point, they probably will take their profit around here, because they go really hard or somewhere around. I think immediately start reversing, most of them are out. But for a price action trader like myself, I would wait for the break of the highest point of the trend line, take out 50% or 25% depending on how I'm feeling about the market, and then wait for the entire move to the upside. So that'll be it for me for this video. If you want me to give you a more detailed explanation on SMC, if you are more of a forex trader, let me know in the comments. I'm going to break it down so you can understand it for what it is. But as far as I'm concerned, price action, let me just summarize the video. The summary is this: price action is better at analyzing the markets. SMC is better at executing trade. Thank you for watching, and I'll see you in the next one.